Good morning, everybody. Welcome to our Thursday Q&A session. Thanks for joining us this morning. We're going to be chatting about Harmony, and we've got Matt Swart, Senior Equity Analyst, that's going to be sharing some insights on Harmony. Sean's going to do his technical bit, and then we'll do the Q&A as per normal. Matt, I'm going to hand straight over to you. Thank you very much, mate.
Thank you, Cyril, and thanks everyone for joining us. As Cyril said, we'll be discussing Harmony today, and in this presentation I'm going to summarize our latest report on Harmony. It highlights the latest results, and in those results HEPS and EPS grew by 132% and 78% respectively, and that was off the back of higher production, a high average gold price, and a weaker rand. The results did come out a while ago, so it's a little bit of old news by now, but I'm going to include, just to make this presentation a bit more interesting, comparison versus peers, and our preference out of the gold miners is for Goldfields. We have updated our valuation slightly, I'll get to that, but we maintain a solid recommendation. So we'll just start with the production, which was one of the reasons why the results were good. Revenue was, the production drove revenue, and the production was higher mainly because of higher grades. The grades at the high yield operations increased quite materially. At the optimized operations, they lagged a little bit. The surface operations also had really good production, with material increases in grades. And the Papua New Guinea operation in Hidden Valley also did very well, with grades increasing 33%. All of that together resulted in production increasing by 6% to just under 1.6 million ounces. The grades are quite interesting because they impact production in that for the same amount of ore that you mill, a higher grade will lead to higher production. And grades are one of those things that is actually a little bit out of management's control. And typically, the deeper you go down into a mine, the grades decrease. Occasionally, you go through little pockets or ore bodies of high or lower yielding areas. And that's exactly what happened to Harmony in the latest financial year in Papua New Guinea. So they've now mined out the high yield ore, and in future the grades are expected to decrease, which will result in low production going forward. So for Harmony to produce the same amount of gold, they're going to have to get through more ore, and that comes at higher costs. But just back to the financials, so the revenue was 25% higher, and also playing into that was the higher gold price that they received. It was just under $2,000 an ounce. The rand weakened against the dollar, which boosted rand revenues, and then there was the higher production. Costs are also quite important, and they were 20% higher. And some of the notable items that go into that was 2.8 billion rand impairment at Target North, and that was basically because they reduced the estimate of mineral resources at that mine, and then 9% increase in labor, and 21% increase in electricity costs. The operating profit, net profit, and earnings per share were 78% higher, and the headline earnings, which excludes the impairment, was 132% higher, and the group ended the period with net cash of 2.9 billion rand. That's not dollars. It's 2.9 net cash of 2.9 billion rand. So yeah, very strong results for Harmony. This chart, we've shown it a couple of times. Each time looks a little bit different. But it basically just shows how the different gold producers have done over a 1-year period. The local listed gold producers are in blue, and the top line there is the line for Harmony, which is basically, stayed roughly at the same level since about March, April, and it hasn't really outperformed peers since that period. The outperformance came before that. Going forward, we don't think that the outperformance of Harmony can continue. I'm going to go into some of our thinking on why that's the case. So what I've got here is just a slide that's got some very simple, qualitative characteristics for each company. Most of these companies are exposed to similar drivers, so a table like this will help differentiate them from each other. We do go into a lot more detail than this, and some of it's included in the report. In most of our reports, we've got a 15-point summary, which has got a lot more detail in this. If we just look at the performance, before I go there, let me just say that our preference is for Goldfields over Harmony. And if you look at the performance, obviously Harmony's been the outperformer. Our view on gold is that it's got limited runway from the levels we're at now. They all kind of lack a key driver for serious growth from here. So if you just from a performance point of view, we should expect either Goldfields to do some catching up or the others to retreat a little bit. In both scenarios, it would be better to hold Goldfields. Also, the geographic exposure, we much prefer the exposure of Goldfields. It's got a much more balanced, geographic exposure in regions that are maybe a bit better than Harmony, because Harmony's got nearly 90% of its production in South Africa, and South Africa comes with unique challenges, which have got to do with labor and electricity, for some examples. And then also on production, so Goldfields produces much more gold annually, and the more gold they produce, we think that gives them a more of a margin for safety. Then in terms of the future for them, so Harmony's diversifying into copper. They've got a project going on in Australia, which is coming online in the next year or so. But getting into that also comes with challenges, operational challenges, delay challenges, and they're spending a lot of money to get that project up and running. And Goldfields is they've also got a project, but that's a gold project in Chile, and that's a lot further along in terms of getting the production up and running. They should be ramping up as we speak. The last update said that they would be ramping up, start the ramp up end of September. Now is obviously a good time to be getting into gold, with gold prices at all-time highs. So the more gold that they mine, the better. If we look at margins, Goldfields got a much higher gross and operating margin, which is good for the mining companies, or any company for that matter. And then labor costs. This is also quite important because, especially in South Africa, you've got limited control on your labor costs because the unions and labor laws in South Africa are so strict. So as a percent of cost of sales, labor and salaries and wages are much lower than they are for Harmony. So those are some of the reasons that play into our preference for Goldfields. And I'll just end off on our valuation. We did update this. We basically got a 5-year forecast. So with the end of the financial year, we just rolled into a new year. As I mentioned earlier, with the decrease in yields, management has lowered their production guidance. So we've also lowered our estimate for production. It's slightly offset by a higher gold assumption. The net impact of that is slightly higher intrinsic value, but we've still got a seller recommendation on this, and part of that is due to our preference for Harmony. Sorry, for Goldfields. And that brings me to the end of my part. I'll hand over to Sean, and then we'll have some Q&A afterwards. Thanks, guys.
Yeah, good morning, everybody. Yeah, you can see the chart there of Harmony. Again, this is yesterday's close. The share price is trading just above its 20 and 50-day moving averages, as well as its 200-day moving average. So the long-term trend is bullish, while the medium trend is neutral. As Matt said, it's been moving sideways since April in a narrow trading range for the past, call it 6 months. You can also see on the chart here, in the short term, the share price has recently rallied off I call it a resistance support area around about the 150 level. So that lower support level is obviously the level of the sideways range at the bottom, the support level, while the upper resistance level is at about 187, and it has gone twice as far as 205, which then formed obviously what we call a double top reversal chart pattern. There at the bottom you can see what we call the MACD indicator. So this bullish price action that we've recently seen, I see now the price is up nearly 2% today, trading nearly 178. This bullish price action is confirmed by that MACD indicator, which is trading above its trigger line, but it's also still in oversold territory, so it's got some more upside. So I anticipate maybe the share price will try and retest at 187 level again. But I don't think we go much higher than that. I think we might already, the shorter term indicators are showing a bit of loss of momentum there. But, we could expect the share price to pull back on some profit taking soon, and move back towards that lower, that you can see that ascending support trend line, as also the same level as the 200-day moving average, and is also part of that support trend line at the bottom. And that's where Matt says is the intrinsic value is at 150. And that's where we will have our sell recommendation. So you might want to take it a bit higher. That's how I see the chart. Thank you.
Thank you, Sean. Yeah, double top's normally quite bearish, but as you said, the gold price definitely supporting these gold stocks. Matt not really interested in owning any of them. I mean, if he has to, he says he'll own Goldfields. We've got a bit of an interesting day in the market today, being the interest rate day. Yesterday we saw the inflation figure coming in below the midpoint that the government watches at 4.4, but I'm sure you all know that. I think, however, that if this trend persists, then the inflation is going to drop much faster than what's expected. And even though the Reserve Bank will probably follow a conservative approach this afternoon, by cutting by 25 basis points, they may be forced to cut by 50 basis points come come the November meeting. So interesting times ahead. I think the rand will strengthen further. And if the currency strengthens, then obviously these guys will make less money, as Matt explained. I'm going to hop over to the chat and see if there's any questions. If you want to ask a question outright, guys, please do so. Just switch on your mic and let's go. Clive says, thanks for the presentation. Saida says, no problem, but I'm sure that wasn't aimed at me. All right. Fikri says, what's the intrinsic value of Goldfields then, Matt?
Yeah, let me just pull it up for you. Get back to you shortly.
Okay. See if we've got another question whilst we wait for that. Don't see anything there. Oh, another thing I wanted to remind you of is in the last couple of weeks, we've been talking about the banks, and we said that when the rates get cut, and then the banks, because of their interest rate exposure, would dip a bit. But remember that we have strong buy recommendations on Standard Bank and so on. So watch out for that dip if you're looking to pick up some banking stocks. Just a reminder.
So just to get back to our intrinsic value on Goldfields is 385. It's currently 385 rand. It's currently at 263 rand.
Okay, so it's trading way below intrinsic value.
Yeah. And we do hold Goldfields in our portfolio.
You do? Okay,
yeah, we
sorry.
do, yeah.
So I was wrong. Yeah. Matt does hold Goldfields in the portfolio. Okay. Thank you for updating that. Frederick says, morning, outlook for gold, $2,700. What effect would that have, perhaps? Harmony and or GFI? Who's going to get most benefit from, I suppose the question is, who's going to get the biggest benefit from a gold price at 2.7?
Yeah, so that's actually the price at which we forecasted gold to get to in the next 5 years. So I'd say that's our expectation. Although it's very difficult to forecast commodity prices. They change all the time and they're very difficult to get right. But given that given the run that's gold has had and its relationship with the US yields that seem to have broken down, not quite sure where gold's going. We've got much more positive views on platinum at the moment.
Yeah, it's always difficult to predict. It's easier to try and follow or stick to the trend and assume that the trend will persist. But to predict is quite a difficult little thing to do. James says, in the latest results, did GFI's AISC not come in higher than Harmony? Gosh, James, I don't even know what AISC.
So what James is referring to is that AISC is all-in sustainable costs, which is I mean, the problem with that is that it's not those numbers are never directly comparable company to company. So it's useful, I guess, when you're looking at it for similar company, but I don't compare them side by side. But in terms of costs, Goldfields definitely got the lowest costs, and you can see that in the margins.
I know when you guys buy a company, Matt, you look at a variety of factors, and one of them is the management. I see James has got a question here, and he says that it seems like he fancies Harmony's management and he thinks it's well run. Any comment?
So I mean, with gold, just to compare, like Goldfields has had I think 3 CEOs in the last 3 years, so a lot of high turnover there. Harmony is, I don't really have many complaints about or strong views on Harmony's management.
All right. Let's see. Clive says, what company will be presented next week? I think we're back with you, Matt, Impala next week.
That's correct, Sam.
Yeah. So we'll do Impala next week. See. No more questions. Any last for the lasts? Guys all happy? Okay, so to summarize, we think Harmony is expensive. Currently, the price is moving slightly higher. Sean's got resistance at 187. If it hits there, probably worth a sell. And then look to buy again around the 150 levels, which seems to be a very strong support. We'll see you guys next week, Thursday. Thank you for joining us today, when we'll be discussing Impala, as we've said. Have a fantastic day. Cheers, guys. Bye-bye.
Thanks, guys. Cheers.